All right. Good morning, everybody. Tim Davis coming to you guys with I'm gonna call this a breakdown and breakout alert watch because there's a lot of things brewing in the market that you really need to pay close attention to if you want to take advantage of some of the best opportunities that this market can have to offer right here, right now. Today is Thursday. It's March the 14th, 2024. It's early in the morning before the market opens, so I wanted to do this before I head out, before the market opens on this Thursday morning. I think there's some more data that's going to come out today, and it could you know it could cause major movement in the markets. And I want to start off by taking a look at the SPXA 200. You guys who follow me, you know I like to pay attention to this tool. It's it's a good measure of overall sentiment, market sentiment, based on the S&P 500. Pretty much it shows the percentage of S&P 500 companies trading above their 200-day simple moving average. I like to use this as a momentum gauge to see how what the overall market, the temperature of the overall market is, and where we're likely to see some type of pivot. And all of these charts I'm going to show you here is we basically, and we're looking at mostly the weekly charts, show you where we could see some type of pivot in overall market, and are we at a area of consolidation, or areas where we can see pivot after consolidation to the up or to the downside. And looking at this tool, what I want to point out immediately is that we're right back at an area, and I think I mentioned this about a week ago. I said pay close attention to this level: 80% of stocks trading above the 200-day moving average has been a level in over the past year and a half, two years. That's been a area to watch for possible pivot points. And if you can see, I'm gonna go up to the start on the left side of the screen. Back around July, between July to I say the September of 2021, this area used to be an area of support. So as you can see, this was an area of support. So every time we hit this level, we got a couple bounces until we finally broke below it. And then former support became resistance. So then we started to see this area act as levels of resistance. So right around between the 80% to 81% level started acting as a level of resistance. And we've been treating it like a level of resistance since, I say, about October of 2021. Every time we managed to get back up to that point, we broke back down. So that was another time that we made it back up there around the beginning of 2023. Hit that 80% level, broke down, hit the 80% level and broke down, came back down, made it back up to the level again around July of 2023, broke back down, made it back up to that level first around end of, say around about the end of 2023. So between November, December 2023, we've been tagging that level. Tagged the level multiple times. Tagged the level multiple times between 2020, the end of 2023 up till around about right before we hit 2024. Then we broke down. And we started to ride this 10-period moving average, as you can see here. Back up and just a breach a hair above that level, hitting about 81%. Looking at the RSI. RSI is showing up. We are back above 70% level, which at above 70% starts to tell you that you're in overbought territory. So where are we at now? We're right back at that level, of a possible pivot point. So that's why I'm paying close attention to these markets right now as we continue to go up and down in between ranges. And I'm going to show you guys that on the major average charts once we get there. But this particular sentiment tool is showing us that we are back at a decision point, In order for this market to really gain momentum, it wants to see a major break above this 80% level. The next level of resistance is right up around here, around 97%. So if the market can push, this sentiment tool can really push itself out of this area and get up to start to see like 85%, 86, 87%, that would lead me to believe that we could be heading back up to the ultimate goal, which is almost 100% of stocks trading above that 200-day moving average, which would be good for the overall bull market. But if we can't, and I would say this may play out within the next 2 days between Thursday and Friday, if we cannot see a major break above this 81% level, we could see a break back below this 80% level. We right now showing it before the market open, we're showing it, we're right at 0.78, so right just below the 81% level. If we can't see a major break above the 81%, we could see a stall below 80. And that won't be good temporary. That won't be good temporarily for the bulls. I say temporarily because I think this market overall is going to find a way to break above this 81% level in a big way. But I think temporarily we could see a pullback here and start to break back down below this 80% level in a pretty significant way. And if we do start to break down, the bottom of this range is right around here. You see this congestion right at the when we pull back to this moving average. I would say it's right around just below 70%. And if we break below that, we come all the way back down here to this level, which is around 57 or 60%. So that's something to pay close attention to. We are at a pivot point, folks. We're at a pivot point where the market is trying to make a decision. All right, with that in mind, let's take a look at the S&P 500. All right, S&P 500 on a weekly chart. Here we go. And what leads me to believe that we could definitely be start to see some stalling or a significant pullback eventually is that all the major indices on a weekly chart are all in most of them are all in overbought territory, and they've been in overbought territory for quite some time. Looking at the RSI first of all, and the S&P 500. Look at the RSI. Look how long we've been. We managed to someone don't want that tool. Trying to get a drawing tool. Stand by, folks. So look how we've managed to so this is where we are at now, pretty much in a box. So right around this 5100 level. So I say between 5,000 up to that 5190 level is where it's the range that we've pretty much been in. And look at the RSI. RSI has been in overbought territory, well above 70 since the beginning of 2024. So since the beginning of 2024, we've been in this overbought territory. RSI has been holding this on above this overbought territory in quite some time. Do we stay in overbought territory all year? I really doubt it. I really doubt that very seriously. I think eventually we'll work itself out of this overbought territory eventually, and coming back down somewhere and before its next run up. So I think we are at an area where we could definitely see a pause, maybe even a pullback to break back below this 5100 level. So that 5100 level is a level to watch. 5200 is a level you want to watch for a possible breakout. So if we start to pull back here and start to stall in this range that we're in, and cannot break above 5200, then we can eventually start to see this range give way to the downside. So that's some levels to pay close attention to. That's a look at the S&P 500. And let's go to our Dow Jones. Looking at our Dow Jones, probably 1 second, folks. A Dow Jones also RSI in overbought territory, and if you notice with the Dow Jones, it made its way back down to the bottom, to the bottom portion of this overbought area. Here's overbought territory in our Dow Jones. Been hanging around in this area for quite a bit, and we made it back down to the bottom of that range, back down towards 70. But it's like it's trying to bounce a little bit to stay in this range. So does it find a way to stay in this range for the rest of the year? I doubt it. I think we eventually will come out of this range, just to build up momentum for the next move higher, if that's what the market is setting up for. But look at this tight range of Dow. So we got above this level of resistance, above the 38,000 level. And then we just pretty much been range bound. Look at that. Been range bound, bouncing back and forth within this box. Okay. And those folks who don't really pay close attention to you know, ranges or candlesticks, or pay close attention to you know, support levels and resistance levels, can be fooled by by some breakout weeks that they think is breakout weeks because it was a big rain week, or a down week because it was a big down week. We could be stuck in a range, and I think that's what we've been in for quite a couple of weeks. So each one of these candles represent a week here. And if you notice, we have a couple red ones and a couple green ones, but they've all been up and down in this tight range for multiple weeks, up down this tight range. Eventually, this range will give way. It's going to break out to the upside, and you look for a move, a convincing move here would be a move above this 39,282. But I would look even more closely to a breakout towards 4,000. I mean, sorry, above 40,000. So a breakout above 40,000 would be a very convincing move up for the Dow. The Dow can break out above 40,000, and not only break out above 40,000, folks, but hold that level. Then that would be convincing breakout here and now. But if for some reason we can't, and we start to move back towards the 38,000 level, I'll be looking for a breakdown below that 38,000 level for a possible breakdown. So those are levels to pay close attention to as related to the Dow. A breakout above 40,000 could be a sustainable move higher. A break down below 38,000 could be a sustainable move lower. So pay close attention to that, folks. Stand by 1 second, folks. So pay close attention to that. Between 38,000 to 40,000 is an area of it's a large area, but it's an area that the market's just been bouncing around in for probably the bulk of this year somewhat so far. So that is the Dow Jones. All right, let's take a look at the NASDAQ. NASDAQ Composite. Here we go. Same scenario. However, this tight range just really started. So top of this range looks to be around 16,000. I say 16,500. The bottom of this range looks to be around 15,800. So between those two levels, 15,800 to 16,500, has been a level that we started to trade between. And we started that out back around in towards the end of February. And since then, we've been in this window, in this box, trading in this box. And if we look at the RSI, again, just like the others, been in this overbought territory for quite a bit. And I like to really point that out because eventually these overbought territories, they work themselves out. And a lot of times when they work themselves out to the downside, I wouldn't say, that the overall run is over, but it just be time for some, for some congestion. I mean, for some relief and a rally. A lot of times when we have these strong rallies, eventually a rally finds a way to relief for some relief to head back down to an area of support somewhere before it starts to build up momentum for the next run up, because nothing goes up in a straight line. You see back here between I guess June of 2020, 2023. We had some consolidation here, and then we broke down a little bit further until the market finally found a way to start to recuperate itself and gather up momentum to continue to move up. We could start to see the same thing here. We could see price action eventually come back down to level support before it finds some consolidation area and then tick back up. So that could be what we could be in store for. So pay close attention to those levels. So again, between this bottom of this red candle around 15,800 up to the top of that red candle around 16,500 or 16,000. Yes, close to that 16,500 level. There's a level to watch for potential breakout, and then below the level is a level to watch for a potential breakdown. And overall momentum right now, looking at the momentum and the TTM squeeze is definitely switching in favor of the bears. And RSI has been in overbought territory for quite a while. So at least when we read that, I believe that eventually this is going to give way. Let's look at the NASDAQ. Now let's take a look at the Russell. Russell, same scenario. And Russell, I highlighted this entire box. So I wanted you guys to see how it's performed over time. So what I want to point out with this Russell is that at the top of this grayed out box represent a strong area of resistance or support, depending on what side of the box we're on. Okay, so this has been a strong area. So that leads me to believe this is really a strong area of accumulation or accumulation for breakout or accumulation for breakdown. And then at the bottom of this box, you see price action pretty much stalled around there eventually before making any decision. So if it was an area of support or area of resistance, depending on what side of the box we're trading in. Now we've found a way to make it back into this box. We're back into this box now. The question is, do we break out above it or do we break down below it? As you can see, we're starting to stall right here within this box with RSI in overbought territory again, and trying to decide if it wants to break down out of this overbought territory, if it wants to go back up into it. TTM squeeze showing momentum in favor of the bears as well. So we could see price action break back down below the bottom of this box. That would represent a signal of the Russell below 2,000. So if we see a move of a Russell below 2,000, that could be a signal that we are trending lower to find a new area of support. Or if we see price action break out well above this level, so I would say, let's see what the top of that box is. So right above the top of this box would break out well above 2130, I'd say 2140. So breakout above 2140 could be a major move to the upside for Russell, and a breakdown below that 2,000 level could be a major breakdown where we could be sifting for lower support levels. All right, so that's a look, folks. Again, we are definitely looking like we are at a stall point where the market is searching for direction, for major direction and moving one way or the other. Now, let's take a look at the VIX, because the VIX is also telling the story as well that you cannot ignore, because the VIX could also let you know what we're gearing up for. Now, the VIX has also been stuck on a range. It's been stalling right at between upside part of this range and the downside part of this range. So the lower part of this range is right around $13. Upper part of this range is 16. So that's what I'm watching for. A major breakout above 16. We can see the VIX continue to go higher, and that would be just the opposite for our overall markets. And a major breakdown below 13, we can see the VIX go lower. But it looks like the ultimate support level down here is right around 1260 for the overall VIX. So a significant move lower below that 1260 could be a sign of a strong bull market. But if we do not break below this $13 level and we continue to stay in this range, the VIX could be building up momentum for a breakout. All right, so pay close attention to that area of the VIX between 13 and 16, consolidation area, building up momentum for either breakout or breakdown. Breakout above that 16 level could be a major breakout for the VIX and a major breakdown for the overall markets. All right, now let's take a look at some of these commodities, folks, because if you haven't been paying attention to commodities, and that's another thing I think of away on overall markets, the commodities is starting to really build up some strong momentum, folks. Commodities are getting stronger, and I'm going to show these on a weekly and a monthly chart because I think they are in a major, they're setting up for a major breakout. Look at gold. So gold, for a while, we have been stuck below 2000, and it looks like we have found a way to maintain a level above 2000. And matter of fact, we created a new level of support, folks, believe it or not, right around 2155. We're going to point it out. So there's a new support level. We used to struggle to get above this level, which is right around 21, say around about 2100. We struggled to get above that level for quite a bit, over a year or so. Tagged a level around 2155 around towards the end of July. I'm sorry, towards the end of 2023. Came back down, but broke back down below that 2000 or 2100 level. Traded between 2100 to 2000 and 2100 for quite a bit, and then we finally got a major breakout here, folks. Look at that. Made it up to 2203, and then we started to pull back right here. Looks like the gold market wants to use around that 2155 level as a new level of support. So we shall see if that support level holds itself and sustain itself for a consolidation area before we see the next big run up. Looking at a monthly chart on gold, it's clearly looking like it wants to have a major breakout. Okay, look at the RSI. We are barely touching overbought territory. We're just touching it. Last time we broke above overbought territory, we went as high as, I want to say, 90, 96. So we could see a sustainable move higher, folks, once we break above this 70% on RSI. You could see a real big breakout. There's a potential for the next year or so we could see gold, I'm not exaggerating, hit that $2,400 level as a possibility. This breakout continues, and I guarantee you all these commodities are showing some major, building up major steam for continuations to the upside, unlike the overall market is looking. And it may weigh on overall pressure, overall markets, but all of these commodities starting to break out in a major way. That's a look at gold. Again, gold is definitely in breakout mode, folks. Whether you've been paying attention to it or not, I have multiple gold holdings and silver and even some oil. We're going to look at all that here in a second, but they are showing the opposite. They're breaking out above major levels of resistance. So this is a huge ceiling here. And we finally broke above it, and we're holding, that's the thing, holding price action above that level. If we break down below it, that could be another story. Right now, markets, we have tested that level multiple times. 1, 2, 3, 4 here, and we got this big breakout here. So tested it multiple times. It's like we have broke out above it, and we're looking to hold that level. So this is a monthly chart. If we stay above this level for the rest of March, we can see a continuation in April. That is a look at gold. Take a look at silver real quick. All right. This is the one that I'm really paying attention, folks, because if we get a major breakout in silver, that will definitely, make me a strong believer that it's commodity, that it's run, because commodity cycle, the running commodity cycle could be definitely on. Because I want to pay attention to this monthly chart. I'm gonna back up to the weekly, but look at this monthly chart. Look at between 2000 to 2000, and I say 13. How, what happened back then with silver? When silver broke out in 2010, it rallied all the way up to 40, almost $50, folks. So it shows you the potential that silver has. And then got to that level when we started to pretty much backfill and start to break down. That took several years for the break back below this level of support. So this level of support, which is right around, let's see, it's right around 26, 27. Let me get rid of this tool, get an exact. It's right around here, around 2680, 2680. So that 2680 level, folks, is a strong area that I'm really paying close attention to. If we can get above 2680, that'll get us above all this congestion here. We could see gold really start to take off. So again, looking at the left side of this chart, for multiple years, almost 4 or 5 years or so, we've been stuck low this $26 level. Well, what we was bouncing off of before, between 2010 to 2013, we bounced off that level a couple times before breaking that down below the level. We've been below this 26 level since 2013. Okay, keep that in mind. So it says 2013. We've been below that $26 level, and now we're threatening to break above it. So from 2013 all the way to 2024, we have been stuck below the $26 level, and now we're just starting to show a real threat. Show some threat and promise back in 2020, but it just made it above it, even touched 30 a couple times, but could not hold that level. Now, so what I'm looking for is a breakout above it and a hold. Breakout above it and a hold could be a signal that silver prices could be headed much higher, and I think it could be much stronger than gold. Now let's look at the here and now. Because the here and now, folks, it's a beautiful looking chart. Again, we're looking at the monthly chart. See all this congestion here with a strong green candle right now. This monthly candle, we could be in store for a possible breakout. Look at the RSI high. It's just, it hit oversold territory back here in July of 2022, and look what it's been doing. And pretty much, it's like a coil. It's been building up steam, folks. It's been building up steam. RSI has been really building up steam, like it's building up a coil, consolidating. It's pretty much consolidating in a range, waiting for a major breakout. And I think we could see that and get that this year. And I think silver prices is a place to definitely, put some coins at a possible breakout. Looks like we got support straight that support level right around 2250. Looks like that's a strong area of support. So what the market is looking for now, I don't think we break it down below that level. We already tested it multiple times. We pretty much been stuck in this range. And I think the breakout, I think the range is going to be broken out eventually to the upside. So yes, silver is also another place that I've been really stacking up positions in a major way. So something to consider. Again, these commodities, folks, are looking extremely strong. And that also leads me to believe that that could weigh on inflation. That could definitely weigh on inflation. So keep that in mind. That is gold. That's silver and gold. Now let's take a look at, which I have been sleeping on lately, but it caught my attention here recently. Copper is another one that looks the same. Okay. So we're going to highlight some areas of this particular market in the past. Here is it's like a topping pattern, or a top in the overall market back between 2010 and 2011. Copper hit that right around that $4 level, just above it a bit, and also made it probably close to 5, and then before breaking back down in 2011. So 2011 all the way up until we got to 2020, copper broke out above that $5 level, $4 level again, hit 5. Before hitting 2022, and broke down again to an oversold position in 2022, and look what it did. Found some support, came down, found support, and just been consolidating in this area. So when I see congestion like this, and we've been consolidating in an area, we are looking for a breakout or breakdown. I think the more likely scenario here is a breakout. Look at the RSI, been coiling up like a spring, and it's starting to point higher. So silver, gold, copper, folks, are all setting up for major breakouts. So those are some good places to hide, or good places to sit if you're looking for a good movement to the upside. All right. Look at a weekly chart here. Again, same thing with the weekly chart. You see this is really impressive. Impressive, not only impressive, but it's also it looks like it definitely looks like it wants to break out. So here's our green candle that we're dealing with right now, a weekly chart. So break above this level, break above this $4 level in a major way could send us up to 450, and then break above that could send us towards this $5 level. And we got to see what happens if we do break out above that 450 level. That's copper. All right. One more we'll look at crude oil, because crude oil is another. These commodities, folks, are really heating up. Crude oil has been range bound for a very long time. Pretty much here in crude, as you can see, since November of 2022, we've pretty much been, we got stuck in this range for quite a bit. 2022, December 2022, or November 2022, all the way until about June of 2023. This was the range that we were in. Then we broke out of that range from around middle of 2023 up until September 2023, where market crude oil found a nice rally. Got up to around just below 198. I said 95 to 98, somewhere around. Look at that. Pivot point came right back down. Where to? Back to the bottom of the range where we seen before. Double bottom. That's what I call it. Double bottom. Consolidating down here around the double bottom area. And now look what it's starting to do. It is starting to turn back up to the upside. All right. So it leads me to believe that the market that crude oil is looking to challenge that high that we saw back in September of 2023. Okay. So we get this, the ultimate next level to look for is a sustainable move. I say it's sustainable because it has to break above that level and hold it, right? And then as we're speaking, look at that. That level I'm talking about is 80. You have to have a sustainable move above 80, which I think is what the market is trying to do. It's trying to get above 80 and hold that level. Oops, didn't mean to go that way. All right. So like we're trying to get above that level and hold that level. Okay. So ultimate move is move above 80, hold the level, and then a breakout. So breakout above this trend line right here. That's right around 82.25. So you see a move above 82.25. We could be definitely on our way. So we see that move above 82.25 after we get a level move above 80 and hold it. You could see a breakout above 82.25, and we could be heading right back up towards that 90 level. No problem. Look at that. Look how the market has really found support, consolidated around support, use it as a launching pad, and boom, we should started to take off. Look at the RSI highs, trending higher, slowly but surely, just continue to trend higher. So all these commodities, folks, pay close attention to them. They are in a major position to really show some major returns for those folks who are invested in those areas. And with that said, I think I'm just about done. Some specific positions that we'll take a look at, especially for copper, because it just started this breakout. Look at FCX, Freeport McMoran. Look what's happening to that. Look at the look at the area. Look at the breakout. So it's breaking out above a range. So this is the trend line that I drew back in 2022. Well, no, it's a trend line I probably drew sometime last year for potential breakout above this level. And it looks like we're starting to break out above that level now. So Freeport McMoran is a good place to start. SLV is a good place to hold positions. Look at that strong level of support that we found around this $20 level, and it's been bouncing off of that level. Finally looks like it's ready to turn up. And a breakout above this level here, which is a breakout above 2380, could be a major breakout for still SLV. So SLV is a good way to look, place to look. GOLD, also another good place to look. GOLD hovering just below 1650. A breakout above 1650 could send this much higher. And for all those AI enthusiasts, this is a bonus. SOUN is something that I found because it's been one that that NVIDIA invested in. Now, with overall markets ready to get ready to stall, this could also see stall, but I think this has long-term promise, folks. So keep that on your radar. SOUN. I actually own I own positions in SOU, and I started accumulating them when SOU and it was below $4. And look where we're at now, 865. So SoundHound, pay close attention to the SoundHound, folks. This could be a good AI play. Could be a good long-term AI play. We'll see. And what caught my attention with this one again, I heard about positions that in NVIDIA was investing in to add towards I guess its overall movement in the AI craze. And I think this one could be a good long-term position. All right, folks, I think that's all I wanted to share with you guys. Hopefully this is some good information you guys can use. And until next video, I'll be signing off.